Hi there, welcome to the closing bell video. There is a heap to get through today, so I'll just get stuck into it without trying to crack a few jokes. To start off with, we've had big moves. The commodity space has been smashed over the week. US dollar flying, the Aussie dollar getting crunched, which is something I mentioned about a month ago. And we've also had earnings season, so there's plenty to look at as far as companies coming out with a few good earnings. So we've had commodities getting belted and a few of the smaller cap stocks really racing higher on the back of their earnings. So let's get stuck into the charts and have a look at what's been going on. To kick things off, let's have a look at that US dollar. And with the Fed coming out and threatening to taper the immense money printing they've got going on, it's the usual game of them coming out and threatening to do things just to see what the market will do. The market reacts and has a dummy spit, and markets fly all over the place, and then the Fed makes their decision about whether or not they'll follow through. So we've got the US dollar sort of rallying quite strongly after the Fed minutes came out. And that seems to have been a bit of a linchpin to some other markets really starting to move pretty hard as well. So if we just have a look at this US dollar, if you do go and have a look at the video I did on the closing bell on the July the 10th, the link to that will be below this video. In that video, I did a roundup of the US dollar and the Aussie dollar and gave you my reasoning for why I thought the US dollar was going to continue rallying. I was mentioning, if we just look at a quick overview, this is a monthly chart of the US dollar. You can see 5 years we've had of being stuck in a range. And with my theory of price action, the point of control, which is the midpoint of that range, is just an area where the market will oscillate back and forwards to after creating a range. There's lots of false breaks of either edge, traders getting shaken out of their positions, and often returning to that point of control over and over again. So prices on that US dollar have started to turn up. And I was saying if we busted above that recent high from earlier this year, the rally should accelerate in that US dollar. So I reckon there's more to go to the upside on that US dollar. And you are seeing quite big moves in the commodity space, probably in reaction to that US dollar flying higher. Oil prices getting belted, iron ore, of course, reacting to China and the clamp down in the steel sector there. So iron ore really collapsing quite sharply. And I think that's just leading into a bit of selling across the board, nickel, uranium coming off, and I'll show you those charts in a second. So the story here on the US dollar, though, is it's broken out above that key resistance. We've been in this area, the buy zone of this huge range created a few years ago for months, and it's turning up. So really target back to that point of control on the US dollar, which is up around 96 and currently trading around 93.5. So moving on to the Aussie dollar, that Aussie dollar really suffering a lot. It's not just reacting to the strength in the US dollar, it's reacting to the very large fall in our key commodity exports, iron ore, of course, the main one. So, you know, we're seeing offshore selling now really stepping up, and we had big moves in BHP, Rio, etc. this week to the downside. And again, on that July video for closing bell, I was taking you through this very long-term downtrend in the Aussie dollar. This is going back to, you know, 2010 from the high when the Aussie dollar was above $1.10 to the US. And you can see there a very steady downtrend with lower highs, lower lows. And I was showing you that we had the sell zone of that most recent wave to the downside, this major wave here, which happened from 2018 to 2020. And we came into that sell zone, and we've got the monthly sell pivot came about. And that was last month. I was telling you, watch out to the downside. And we could see targets back to the point of control, the midpoint of that range. That comes in around 68 cents. So there could be more downside when you look at that US dollar looking like it's going to spike higher. I'd say the Aussie dollar is in for a pretty quick trip to that 68 cent area, which will inform moves in other markets, of course. And here we have the oil price going back many years, going back to 2008. What I want you to focus on is this most recent wave to the downside, again from 2019 to 2020. You can see the sell zone of that wave up here, and looking like the potential of a monthly sell pivot in oil prices from that area. So oil prices looking like they might actually head a bit lower from here. Yeah, a bit nervous about my call on Woodies at the moment with that huge BHP merger as well. But I reckon the lower they go, they will become quite a good buying opportunity. But we'll talk about them another week. So moving on from oil, just to again give you a quick roundup. Copper prices, you can see here again the long-term chart. This is going back to 2007, and just notice the constant false breaks of major highs, which we've seen there as a constant theme. And here we've got another rally and false break. We got the monthly sell pivot a couple of months ago, and then the prices rallied back to the upside into the selling pressure and have turned back down again. So really copper prices looking a little dangerous to the downside. Long-term bullish, but it's been a massively strong rally out of that crash from COVID. So, you know, nothing wrong with a bit of a pullback, maybe to the point of control. Doesn't mean it's not ultimately heading higher. I think the long-term story for copper, for all those commodities, the battery commodities, et cetera, is still long-term bullish. But I just think the short-term rally has gotten a bit overstretched, so it just needs a bit of a correction. And this is just a proxy for the uranium price, just to give you a sense that there's a bit of selling across the board in the commodity space. This is a global uranium ETF, and you can see that's been selling off for the last few months. And yeah, again, this is just a correction of, you know, this rally that we've seen in uranium. It's been selling off for many years, and it's come off a very low base at the start of last year, and it's been a massive rally. So really nothing wrong with a bit of a correction. Doesn't mean it's not ultimately heading a lot higher. It's just a bit of a corrective phase. So I think it becomes a buying opportunity if this sell-off really does gather steam. So now let's just quickly move on to a couple of stocks that had earnings releases last week. I think they're pretty interesting little companies, and they're looking like they possibly could try to head higher. Atomos is one of them, AMS. They're a very interesting little company, born in Melbourne, in fact, and now really taking on the world. They make these monitors that people producing video and even movies, professional video, use. They're using ProRes format, which is being pushed by Apple at the moment. And they have many different products all across the spectrum, from YouTubers all the way up to really professional outfits that use these monitors to really lower production costs, increase the quality of what they're doing, and increase the pace of what they can churn out. And their products are very well respected. And they lost $12 million last year. They've flipped into a profit this year. Revenue, I think, growing about 78%. I think they got about a $4 million profit all up. But the market has been creeping higher in this one. This is a COVID crash. You can imagine their sales fell off a cliff. They couldn't sell anything. And they've been slowly recovering. But then the last 6 months, they've really done nothing. And this is what's happened just in the last 2 days after the earnings result came out. So going from about $1.10 up to $1.48, and just looking quite strong. There's the old all-time high there, up around $1.80. So you wouldn't chase it, I guess, but any pullback down towards 120, 130 again, probably worth it for the bottom draw for a long-term sort of investment. And Redbubble had a massive run last year, going from 50 cents to $7.22 over the COVID period, because their sales absolutely exploded. They're really very interesting little company that gets got millions of artists on the books that create great little products. People can go online and buy t-shirts and have pillows made up with all these amazing different creations. and their sales just took off like a rocket. And of course, the sales ended up pulling back a bit. They couldn't keep going at the pace they were going. And the price fell back from $7 all the way down to $2.62 last week. And then their earnings came out. Now, this stock has a very large short position. I think they got a bit overstretched up here, and the shorters had a field day on the way down, selling it down into those low $3 area. But I think the results came out and were pretty impressive. They've still got a bit of work to do, but the shorters, I think, took fright. And you saw, a nearly 60% rally in 2 days in this one, from $2.60 to $4.21. So that's one to watch. When the shorters move in, usually you'll get a massive spike like this, and then the price will come back off, because it's usually a bit of a panic when the shorters decide to get out of their position. So no need to chase it higher right here, but any pullback in this one is probably worth having a think about. TWE is another interesting name, Treasury Wine Estates. They've been hurt by the tariffs imposed on them from China. Their sales to China, which were huge in the billions, went to zero. So you can see there that they got absolutely hammered last year, falling to a low of about $8. But they've been in recovery mode. They've changed their business around a bit, and they've just come out with results that were actually pretty impressive, up 3%, about 43 cents earnings per share, and just signs that they've managed to take the China problem in their stride and make the decisions that they needed to make to realign their business. And really, great product. No one's going to give up drinking anytime soon. And their wine is really in demand worldwide. And, there's plenty of other markets their wine can go to. So this one picking back up, you can see there, finding the bottom and starting to head back up. So for a long-term investment for, those sort of SMSF type things, if you're thinking of a 5-10 year view, not a bad one. And finally, the one that I think is a little firecracker for the future. It may not look great right now, but they've come out with their earnings. That's Hum Group. They are a buy now, pay later group. They came to the party pretty late. They have not participated in the huge rally from all the afterpays of the world and Zips, etc. But they have a good management team, good balance sheet. They're going after the niche market, which is the higher ticket value items, which I think is an interesting take on the buy now, pay later space, which I think could pay off. They have a lot of legacy assets and things that are winding down. So their overall revenue mix was actually down, but their numbers in the buy now, pay later space were really quite impressive, with customer numbers growing to 2.7 million, big growth, over $1 billion in total transactions in their buy now, pay later space. So they're getting some traction there. And just technically, I quite like the look of them. What I like to look for is these, massive waves to the upside. You can see there from 2009 to 2014. And then things haven't gone so well for them, have they? So this has been a really long, arduous journey to the downside. Lots of people, very unhappy investors in Hum Group at the moment. But they are trying to make a basing formation, and they're doing it in the buy zone of that whole wave. So this is the area where I'm interested, and it's been quite a few years of work, but with the results that came out, they have just seen some buying pressure. They've gotten above $1. The long-term trend hasn't quite shifted to the upside yet, but this one is one to have an eye on, because if their numbers, especially next quarter or over the next 6 months, do start to really see some traction in their offering, this one is going to blast off to the upside. So yeah, definitely Hum, the one that I think is worth keeping in your watch list. So that's enough for this week. Look, I run this Australian Small-Cap Investigator service where I send out, one trading idea a month to people. And look, we're running a promotion on them at the moment. This is what we do. This is how we make our money. And the link to check out 7 stocks that I've just sent a buy alert out on to people can be found below this video. So I'd love it if you could go and check that out, just have a read. through some of the stocks that I think really are quite interesting companies that could blast off over the next few years. And look, I run a service called Pivot Trader that's $3,000 a year to join, and this one is under $100. Now, it doesn't have all of the technical analysis side of things that I do with the Pivot Trader service, but you are still getting my work and effort there in that Australian Small-Cap Investigator, just so you can get a sense of the work I do. So anyway, I hope you can check that out. Otherwise, I will come back with more next week. All right, cheers.